I'm going to go ahead and kind of kick off an introduction. And you guys may hear the same thing said now 3 times if you were on here early, but I'm going to go ahead and do it. We want to welcome everybody out to the January WASDE release report. You got Brooks and Sterling and Ashley. And as we talked about in the pregame session, we've got cooler temps and some moisture that's moved across most of the country, and most of our listeners are experiencing. But we're looking for something to try to heat these markets up today. And I know in doing meetings across the country so far, Sterling and I have been on the road. It's amazing how much more attention farmers and agents pay when times get tougher from a cash flow standpoint. We pay a little bit more attention at the meetings. We listen a little closer. It's just kind of part of human nature. And you all are on here early in hopes that maybe this WASDE report can bring some excitement to the market in what's been really a challenging 30 days in all of the big 3 commodities: corn, beans, and wheat. Sterling, if we've got to look to 3 or 4 variables today, what are those variables that are going to be? What are those variables going to be that impact the markets the most? What do we need to look for?
Well, the January report puts everything on the table. They can change acres harvested, they can change yields, and obviously all the consumption numbers. So where we could find a little bit of bullishness and a little bit of good news is if we can manage to find something maybe on the production side where we cut down acres a little bit, do something like that. That is something that could help us, particularly with soybean stocks. We don't need to shave that much out of the soybeans to tighten that balance sheet up and get that market to bounce a little bit.
I'm going to stop you right there. And I hate to do this, okay? But Sterling, we got kind of these soybeans. We may have a tale of 2 commodities within the single commodity. Let's talk about this real quick. Old crop stocks, tight in the United States. Crush margins good. Exports relatively good. Taking a little bit off that South American crop, primarily in Brazil. Some optimism on old crop beans, but then we look at new crop beans, and new crop beans are going to have some new hurdles to face. What should we be looking for there? Old crop versus new crop in the coming weeks.
In the coming weeks, new crop is going to be affected by 1, corn prices, 2, how well the South American crop does. Old crop is going to be what it is, and we're going to be competing with South American beans here straight away. One concern about the South American beans, we have problems with the Panama Canal. We have shipping issues across the Red Sea. This is driving shipping costs up a little bit. This maybe can help us. This may hurt us. We'll just see how that plays out. But that is creating some problems. Now, when I started to look at next year's balance sheets, I took corn acres off. Those acres are most likely going to turn into soybeans. They're not going to turn into wheat. So that pushes a little bit more of the burden on the soybeans. So we end up seeing stocks go up a little bit, but we can handle a little bit of higher stocks simply because we can increase crush margins. The need for soybean meal, the need for soybean oil can help us out a little bit. Corn, we don't have quite that flexibility. The ethanol picture is never going to get any better than it is.
Okay. Stop right there. Stop right there. Big statement. Okay. Yeah. Not a gut feel. Okay. Yeah. There's statistics behind this. Folks, if you go back and you look at motor fuel consumption, let's look at unleaded. Pre-pandemic, we haven't come close to that usage. In the low 30 billions of gallons used in the U.S. on unleaded motor fuel, we haven't come within 10 to 20% of that since we've recovered. On top of that, Sterling, we got this electric vehicle thing going.
Well, the electric vehicle thing is one part of it, but the thing that people, then I'm not going to get people riled up about the electric car bit. There's another kind of car out there that's becoming even more popular than the electric vehicle. The hybrid, where you have a car that uses an electric motor, butts around town here, then recharges its battery when you go on the highway. You have no gasoline issues, you have no charging issues. Toyota, one of the more savvy automakers, is betting heavily on these. And what that means is where your car uses most of the gas is accelerating from a stop. You stop, you accelerate up to 40 miles an hour, you cruise down the street, you hit the brakes, you waste all that energy. When you have an electric motor to do that, it takes very little electrical power to do that, and the electric motor has a lot more torque than an internal combustion engine. So it's very easy to get that car moving. That changes the use profile of gasoline noticeably. That's the first thing. The second thing is we have newer cars coming onto the road all the time as the U.S. fleet of automobiles is really rather old. New cars are inherently better on gas. So those are structural things that we are not going to be able to get around. The third thing is the driving demographic. Kids don't like to drive. They like to sit and stare at the phones. And that is a real issue. And looking right here, this is our monthly gasoline demand chart. I'm going to go ahead here and turn this into a line chart. And you can see here, how gasoline demand. We had peaks, valleys, but we're not going anywhere. Notice we're the average. We can barely get up other than our little bit of craziness here in 2019. Other than that, notice we're not in a bullish trend here. We are in a sideways trend. So any population growth is being offset by technology. Eventually technology will lift off and that will change it. We're not going to need any more ethanol than we're already using.
So Sterling, moving from ethanol demand, I think we've kind of done a good job of kind of proving that point that it's as high as it's going to go right now for the year. Domestic demand looks steady. We turn our attention to exports, which is another variable in this one. The USDA has been somewhat more optimistic on corn exports over the last couple of weeks. What should we expect there?
Well, what I notice, and it's nice that bureaucrats have opinions and things. What I look at on the export sales report, I look at new crop sales. Are we getting new crop sales? The main part of the report is old crop corn, stuff in the bin going out the door. If commercial grain traders are convinced that we're near lows, they start making new crop purchases. Makes sense, right? I think we're at a cheap price. I'm going to buy some November beans. I'm going to go in here and make cash purchases. Those have been virtually non-existent, meaning the hand-to-mouth phenomena is still in play. Meaning, if I need corn, I buy coverage for 6 weeks. I buy it for 12 weeks. Maybe I buy it for 18 weeks, but I don't buy extended coverage because I have no fear that prices are going up. And right now, hedges are very cheap, so it's very easy to lock that in. If we start to see a pickup in those new crop sales, that's a sign that people are going to want coverage. That's going to be one of the signs that we are making a fundamental bottom. And thus far, that hasn't happened.
So that is one minute focus of optimism. The other one that we may look for today, and while we're a long way out, are the Brazilian corn production estimates that look like the average guess for this report is a tick down from where it was in December. Tell us why that's the case. Tell us why maybe Brazil or CONAB is a little bit more pessimistic than the USDA is.
CONAB's pessimistic because they want to see higher prices because Brazil needs to export the corn. That's why CONAB is pessimistic. They always have big eyes before they plan it, then they get pessimistic, and then we always land somewhere in the middle. Brazilian corn production will be lower because of their weather issues. There's no question about that. On the other hand, our friends in Argentina are going to be producing more corn because their weather was better. And at the end of the day, if we were to move right now, I think we're going to see a number of 2118 for corn ending stocks for the U.S. The survey guess is 2095. Here's the deal. If we're at 2150 or if we're at 2050 or even 1975, it isn't going to matter that much.
So what we're talking about there is around 2 billion, 2.1 billion in exports. And if you talk to people in the industry, unfortunately, they're going to tell you that they think that's as high as she can go. And we're going to actually have to pick up the pace to get there.
Now, I do have some right on the edge news that's a little bit itsy bitsy friendly here. China's corn production is expected to be a little bit less exciting than what we expected. Maybe some problems with that, and a little bit lower bean production. So maybe we can get China back in here and buy a little bit. I would not count on them buying much. That is just not going to be part of the picture. But maybe they can buy some. And if we can test off the edge a little bit, maybe we can at least get a market that's not depressed, but we can at least get a trading market where we get some volatility and we get little bounces. They're not going to be tremendous or stupendous, but little bounces where we can effectively jump on. That is probably the best scenario I can paint until we start thinking about planting.
So Sterling, we've got 4 minutes. I want to touch on these Chinese proposed purchases of wheat, and then I want to kind of get really in the weeds on those South American numbers, just so people know what to look for. China and wheat. What in the heck is going on? Soft red wheat purchases from the U.S. Why are they doing that?
Okay, so China's been in and they bought about 1.1, 1.2 million tons. The good news is they took 236,000 metric tons of that as imports. It went on a boat and it went away. That's good. That means they're taking it. China needs to fix their economy. And if you're watching Chinese hog prices, their prices have been dropping as well. China needs to control food prices to keep the populace happy. They have deep unemployment problems. They have a lot of issues there. And one of the staples of the Chinese diet beyond pork are noodles. And they want to make sure those noodles are nice and cheap. So they are coming in here and grabbing up some U.S. wheat when they can buy it. And that's good and that's supportive. More importantly, they are taking it. Are they going to buy great amounts of this? I don't know. Brazil's wheat production, by the way, is going to be noticeably lower. The weather hampered that quite a little bit. And that took a couple million tons off of it. So that will help. The problem is there's plenty of wheat in the world. And it'll help a little bit, but it's a better sign at least they're talking to us and they're buying.
Well, Sterling, if I have to pick one fundamental variable out of this report that will affect all commodities, I've got to look at Brazilian soybean production. Now, when we started this year off, and instead of talking million metric tons, I'm going to tell you that they were slated to grow around 5.93 billion bushels of beans in Brazil. Now, the USDA has lowered that. CONAB sets even lower than the USDA. This is probably, in my opinion, the fundamental spotlight on this report. Go through this with us, Sterling.
Well, what we have right now, we were expected to produce 161 million tons of beans in Brazil. Right now, we're going to produce 156.6 is the street guess. If we can come in below that, that will send prices. That should turn around prices. Understand the fact that Brazilian soybean production has been the most telegraphed item in the world, and the prices still go down. That's not such a good thing. Okay. They're still expecting record exports of soybeans out of Brazil. So we're at 156. If we can cut that number, let's say 156 is a guess. We could take the USDA number down to 153. That will at least, give the bears a bit of a shake.
Yeah, especially again, going back to that main theme, old crop soybeans. I think that in addition to that, with this decline in price in March and May soybeans, we're seeing, we talked about kind of still a robust crush margin in the United States. Basis levels should be pretty aggressive when it comes to farmers needing cash and perhaps moving soybeans on basis contracts. So
we have some numbers here. The corn
right.
per acre was 177.3. That is a big move higher.
Oh, wow.
That's bushels an acre higher. Corn ending stocks at 21.62.
Not good.
Was up from the prior number. That was up. I was one of the higher guesses of 21.8. Corn exports, same at 21. Soybean ending stocks, I was thinking we were going to be about 220. We're at 280.
Wow.
Soybean yields per acre at 50.6. That's up 0.8. Soybean production, 4165. That's 40 million more that went straight into ending stocks. They didn't move the export number at all. Wheat ending stocks at 648. That is actually where we got a little bit of bullishness here. We actually came down a little bit, and I'm guessing production was left the same. So the only place that would have come from is exports. So they did bump up the wheat exports. That's one bit of bullishness there. Okay, let's go down here. Let's take a look. Cotton ending stocks at 290. That's a little favorable. A little favorable. I don't hate that number. Look at these South American numbers. Brazilian soybean production, 157. A little bit bigger than the guess and a little bit where we didn't need it to be. Brazilian new crop corn production, 127, down from 129. Not that different from the initial number, really, not that much. Argentina, soybean production 50, that's up from 48 last time around. And then for corn production, we are at 55 and unchanged from the last time around. So all in all, I would score this report as a little bit bearish. The bump up in total corn production, we added about 100, and that all kind of went right into, pretty much right into the ending stocks number. We're at 2131, so we added 31, and we added about 80. So we found use for 50 million bushels of that corn.
That's the residual category, right, Sterling?
That's that residual number.
Yep.
That's kind of, it's the USDA's, it's their little slush fund, that little extra money that stays in the jar in the closet. March corn is down 8 1/4 cents on this. That is a new life of contract low. Let's take a look at December here. December corn is 483 3/4.
Wow.
Here is our previous support level. Our previous support level was, the low was 485 3/4. We are breaking support here. This would portend to things going noticeably lower. Problem in the soybeans, our support level here for March beans is $12. That's the big number for everybody. As you can see, we had a little deviation a little bit. We need to absolutely hold $12 here, or we're going to $11.50, probably sooner rather than later. New crop, they may be ignoring new crop a little bit here. I wouldn't, I personally, I wouldn't be trying to trade new crop off this number. We'll see what they're doing. And we're only down 12.5 there. We are getting a little bit of a bounce, which is good. You can see here, I'm going to get a little intermediate chart here. And I'd like to remind everyone how we finish today is more important than what we see right now.
So many times we report these, and by the time we're off here at 1/4 after, 20 after, we've even seen substantial changes. Let's hope that's the case.
Well, here we got a nice little bounce here. We ran out of sellers, and we found some buying interest. So, new crop south of $12. If we can have some buying interest at that level, that would be a good thing. So we'll see. Let's see how.
Where's wheat at, Sterling?
That's here. I'm not trying to be a Debbie Downer here on the weekend. Here, I'm trying to ferret out what we can have as bullish out of a bad report. Wheat's only down a penny. Okay, we can live with that. That can correct itself pretty quickly, as the numbers were a little bit well. So wheat is holding that $6 level. That seems to be a pretty good level for wheat. And if we can, hold that with some degree of reasonable time, there's big short positions in all this. Okay. Meaning those short positions in corn, we hit a new life of contract low. That means every short position is profitable. Okay. What does that mean? That means when you're profitable, you're subject to liquidation. We have a lot of other uncomfortable things going on in the world today that we haven't talked about. And that, some short covering that will produce a pretty good rally if you're following the hog market. There's some pretty easy money to be made there this week.
Sterling, I want you to back up just a little bit. When you said liquidation, that was meant in a positive form.
Right. When you
explain that on a short
okay.
position.
Okay, I have sold corn and I am short from $5 a bushel. I have a position on, I minus, let's say, 100 cars of corn. Corn comes down, 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 down. I'm making money. I'm making money. When I liquidate my position, I'm actually a buyer. That means I'm taking the corn off the market. Open interest goes down because my contracts disappear, and that creates buying pressure, which is what we refer to as a short covering rally. We had a beautiful one of that in the hog market this week. Every time you see a coal forecast like this, hogs go up. Hogs went up 6, 7, 8 cents a pound. Open interest went down 16,000 contracts across the middle of the week. Courts came in and bought them back because coal causes all kinds of trouble for hogs. So that is what we are becoming subject to, and a risk-off situation. If you're looking at the situation in the Middle East, it is the K. There was UK and United States planes bombing Yemen last night. So things are escalating. When things escalate, you have profitable positions. Very often risk-off becomes covering it, and the grain market, that will produce a bounce. We get that bounce. It'll be quick. It will be terse. Be ready to jump on it.
You know, Sterling, as we kind of round this thing out, one of the things, the big questions last night were at one of the meetings we had down in Kentucky was, what levels do we sell? And one thing that we've rolled out this week is we've rolled out the action indicators. And when we get into these types of markets where we're testing lows, it's really tough to say I'm looking for $5 December futures. It's really tough to say I'm looking for $5 March futures. What you really have to do is, in my opinion, is not look at the price, but look at the market conditions that are out there. Because let's face it, nobody wants to sell 550 corn this year after having sold 650 and 7 last year.
Okay.
Those indicators that we rolled out Tuesday and Thursday, okay, I think can be helpful when making decisions if you get the luxury of waiting this market out. A lot of folks won't have the luxury of waiting this out. In other words, they have to turn corn and beans and wheat, specifically corn and beans, into cash, sterling. If I'm on the farm, I absolutely have to get cash. I have to take corn to town, and it's ugly. I've got to sell it. What in the world do I do to
Okay.
try to protect myself against selling at the bottom here?
Well, what you can do is, if you want to lock in and create a floor, you can buy a put spread here. You buy, I hate to bring up the 4.00 level on March corn. I really hate to say it, but I can't say that it's not going to happen, because it could. It could. Okay. That's another 50 cents a bushel. What you can look at doing here is you buy, a 430 put, sell a $4 put against it. That gives you a 30-cent amount of breaking that may, that may work. This market is deeply oversold. But as we've seen with markets, they can stay this way for a long time. Right now, just looking at this chart, there is no reason for me to buy this corn. If I were sitting across town here working for ConAgra, buying the corn, you know what I'm going to do? Calling it an early Friday, and I'm going to go scoop my side. Because we're making new lows. Maybe you buy a fraction of what you need, but there's no reason to come here until we see some sort of spark that's going to change that tone. So you can look at trying to get yourself some options, cover yourself, putting in a floor. That's the best you can do. If we can bounce 10%, okay, that's 50 cents a bushel. That gets us back to $5. I would consider that a pretty good situation, unless there has been something that fundamentally changes the look of this market. Meaning there's now a reason to be in a hurry to buy it. Meaning we're seeing low crop export sales. That would be step one. We have seen a situation where there is some sort of trade breakdown and people are going to be forced into buying board corn. What would that mean? The world political situation decayes to the point where Russian grain is embargoed everywhere, including China. If that were to happen, forward corn would become dear because that would be the most insured supply. That mixed with a short position to produce a bounce. So that's, where we sit right now. Can we get better for next year? Maybe, but we're going to need to get that ending stocks number from 21.6 or 2.160. If we could work that down to 19 even, that would stop the bleeding and we could then get a trading market. Right now, funds are coming in with their biggest short position ever for this time of year. When I looked at years that were similar, we got a nice bounce June, July timeframe. We finished the year about where we were right now. Not saying that's going to repeat. It's a long way away, and it depends on the weather. My concern is, we've had several years, Brooks, of weather being messed up, right? Yep. I have a feeling that our weather pattern, at least maybe for this growing season, may get a little bit closer to normal. The huge drought here, maybe we can get some relief, which most of eastern Nebraska has had serious problems, and a lot of that's dryland corn. So we do have that concern. We need to find other places to export it to. So if we can have a little bit of a problem with China and get them to come in here and take some, that would provide some relief.
Sterling, any green on the board right now? Anything you can point out?
Anything that's green on the board? Let's see. Right now, corn's down a dime, beans are down 25 cents. Crush margins are back to a full $1 for spring, which is good news. We have wheat. Kansas City wheat is up a penny.
Yeah, there we go.
There we go. Hogs are lower, cattle are lower. Let's see, crude oil is up 90 cents a barrel. Crude's been trading very oddly. It gets strong overnight, then kind of fizzles out during the day. That pattern could change. Natural gas is up 7%. Gold is up $32 an ounce as global conditions are getting a little bit nervous. And interest rates have gone absolutely berserk.
Yeah.
So we have, the state feels a little uncomfortable. Things aren't playing according to the rule book other than the grain market. We get a bigger than expected ending stocks number in corn, you would expect it to go down. The big surprise on this report, U.S. soybean ending stocks going up. That was a big surprise.
I think that one and that corn yield at 177. I think that was a little unexpected as well.
I didn't look at anybody's guesses. I mean, one thing about this, all the uniform guesses from all the analysts, we were fairly tightly packed around. Add a bushel or two, add a bushel or take away a bushel an acre here or there. Seeing a 3 bushel change on the January report is out of bounds.
Yeah.
That's not normal. Okay. That may be the biggest single change. And when I do this for Wednesday and do the full WASDE postmortem, that may be the biggest change in history. So that was a big surprise. The lack of cut for soybeans for the U.S. or for Brazil was also a bit of a surprise. That number came out a little better than expected.
Well, Sterling, I think we've done a pretty good job of covering the basis going in and going out of this report. I know it's Friday. It's kind of gloomy and rainy and snowy in a lot of the parts our listeners are from. And I wish we had something bright and warm to share with you, but unfortunately, we just don't today.
Here, again, where do we finish the day? Maybe here looking at these March beans below 1206, maybe there can be some bargain hunting here. Beans are getting close to $12 on March. Which would you rather explain to the boss? Why you didn't buy the beans at 1210 when they were at 1250, or why you bought the beans at 1208 when they're at 1198? That's a question you have to ask yourself, because I can guarantee you, Crifftown right now, there are people asking themselves that very question. And maybe we get a little bargain hunting in here to reverse this, because we do have some pretty seriously oversold charts. Also, if you're the hedge fund manager in Wilton, Connecticut, I've made a lot of money on these beans. The weekend is coming and there's a lot of shooting in the Middle East. That could send soybean oil higher. Do I want to take some of my profits? I'm going to go buy myself another Bentley. They're asking
kind of interesting. Our our action indicators, they kind of work in reverse. If you put yourself in the seat that Sterling's describing here as a spec fund manager, whenever that RSI is extremely low, it signals a good time to buy. When the spec fund are short selling these crops, it's a good time to buy. Let's hope that they're looking at our action indicators in reverse today, Sterling.
Well, they're all trained to do that. They all understand how the fund position works. And what our job is to do is to watch when they start heading towards that tiny exit door.
Yeah.
Because that's what we want to be in front of. That's what we can buy some bargains. And more in this case, in a hedging situation, your chance at reownership. That is another thing that we need to look at and think about, because this year it's going to be hard. We are not going to get, unless we have some severe weather issues, we're not going to have the prices we've had. That's just not part of the picture.
Yeah.
So we've got to bring out all those other plays. And, it's going to be like this football game in Kansas City on Saturday. Wind chill is going to be 25 below zero. I don't know how those folks, guys from Miami are going to feel about this. It's going to be hard enough on the people from Kansas City. So they're going to have to manufacture, and they're not going to be able to play like they normally do. We're going to have to do the same thing, marking our grain until things change, which I'm going to say something optimistic. I think maybe 2025 things are going to be better.
Let's hope. Well, I appreciate everybody tuning in this morning. And Sterling, we've got a marketing meeting coming up. When is our next Thursday marketing meeting?
Third Thursday marketing meeting is, let's see, the third Thursday in.
That'll be about a week, won't it? 18th.
18th. Let me check here real quick. Here,
I think it is. I've got my calendar out here, so it's going to be 9 a.m. next Thursday.
The 19th, the 18th. Yes, indeed. So we've got that coming up next week. And that will be, we will have a little more data, a little more information with a better feel on South America. And hopefully this is the crescendo of the Southern Party.
Absolutely. All right. Well, thank you all. Have a great weekend.